Good morning. It's Monday, and it's Debbie, the Husher Group of William Raveis, and I am here with, like I should
Chris.
touch you right there,
There you
Chris
go.
Blum. Chris, introduce yourself.
Chris Blum, William Raveis Mortgage, covering the entire state of Connecticut, but primarily Middlesex County. Here today, happy to be here.
Yeah, well, Chris is right in our office, and there's so many different headlines that are going on and so many things that you read, and we just wanted to kind of talk about what is happening when it comes to mortgage, interest rates, refinancing, all of those things. I don't know if you saw the Sunday stats that we posted yesterday. So there were 726 properties that did go under contract in the state of Connecticut just last week. And actually there's more under contract than there were new listings. So there are buyers out there. So first off, we hear about Fed cutting the rates down to zero. So how does that impact the mortgage rates?
Well, it definitely has had a positive impact on mortgage rates, driving rates down. Rates are not zero, contrary to popular belief. The Fed funds rate is zero, which all that means is that's the rate that they'll lend to the banks. Okay. Unfortunately, banks will not cut mortgage rates to zero. And from very, very high level looking down, so I always use the expression from 30,000 feet looking down. This is my explanation as to why rates won't go to zero. The bottom line is banks, lenders, mortgage companies have to make money, all right? And as rough as that may sound, when mortgages are sold, people get paid. I personally get paid, my team gets paid, my assistants get paid, my staff gets paid. So the Fed funds and the Federal Reserve can work for zero because us as taxpayers can pay into that and make money back. But banks can't work for zero. And that's really, that's the bottom line there. That's why, the rates can't really go much lower because there's just no spread left in the dollar to pay everybody who needs to get paid.
So what are the rates right now?
We're locking rates right now as low as 3.25% for conventional loans. And these are not the perfect loans. A lot of people say, well, that's you have to be the perfect borrower for that. That's not true. There's a lot of borrowers out there that are getting funding at 3.25, 3 1/8 even. Possibly today, we may get back to that 3 1/8 point today. A couple months ago or a couple weeks ago, we were locking as low as 3%. They've bounced off the bottom a little bit, but still incredible value out there.
Yeah, that is. So do the rates fluctuate daily?
Rates, believe it or not, we got to a point where rates were fluctuating literally hourly.
Wow.
We're very, very volatile for a little while there. They've calmed down a little bit, but it's day to day. With everything that's going on in the economy, in world news, we come in and we just don't know what to expect on a day-to-day basis. We're all in this together. We're all learning together. And we've been shell-shocked together. This has been a wild time.
Yeah, absolutely. What is the impact on like a 10-year, 15-year, 20-year? Is it still around that 3.25, or is it lower?
So the 30-year is kind of the most popular note, which has always been. That's right, that 3.25. We are doing some shorter term, but right now the benefit isn't there like it was at one point in time. So if the 30-year is at 3.25, it's tough to educate a consumer and say, okay, you want to go with 3% because that payment becomes very compressed from a 30-year to a 15-year. When the 30-year was at 4, 4.5, and the 15 was at 3, the payment wasn't so compressed. But when rates are as low as they are, for a new consumer to go into a 15-year, it's a great value. But again, that payment becomes very, very compressed very quickly.
Yeah. So it's obviously one of the things you talk with and you decide. So what is the lowest interest that you have seen?
We locked the other day at 2.5% for a 15-year.
Wow.
15
okay.
years. 3% is the lowest I've seen for 30.
Okay. So the interest rates are good. So
they're fantastic.
The other thing that I want to talk about, or if you can shed some light, is the FHA financing, because that's a great option if somebody has limited money for down payment. They only have to put 3.5% down. However, this situation now has caused some changes to that. So can you let us know what that is?
Certainly. Yeah. FHA, 3.5% down. Low down payment loans historically have been very beneficial for borrowers with lower credit scores. Unfortunately, with what's going on right now, the FHA, VA, most of the government programs have really tightened up their liquidity, almost in an attempt to prevent the lower credit score borrowers from going in right now with those types of loans. As recently as 6 weeks ago, we were lending as low as a 580 credit score, which is on the lower threshold of credit scores. And now most lenders and most banks and lenders and mortgage companies are up towards the 680 mark. So that's
Wow.
a point swing. As a percentage, it's a huge jump in credit.
So if you're at the 600, 625, are there buying options right now, or right now is it like on hold?
Well, we can still use the FHA through CFA, the first time homebuyer program offered here in Connecticut.
Okay.
Again, there's restrictions there, so it's tough to talk generically about CHFA because there's income limitations, there's asset limitations. We've got to be careful about what we say with CHFA. Great opportunities, and that's where we'll go if the borrower fits that mold for sure.
Okay, that's for first-time home buyers. Okay.
First-time home buyers.
The other thing that I'm pretty proud about with our company, there are people who are not buying and obviously during these tough times need some extra cash. And refinancing is potentially an option if you're not planning on selling. And William Raveis is donating, was it $100 to United Way for every refinance we do, which I think is fabulous. So what are the refinancing, what's that scene look like, cost, everything like that, Chris?
Yeah, it's very similar to going through the purchase process, less the stress of having the other side to deal with. So when I'm refinancing a property, we still appraise the property, and I want to touch about appraisals in a little bit as well. We still appraise the property, we still vet the borrowers. The process is very similar to going through the buying process, but you just don't have the time deadlines. They're not as strict because you're already living in the house.
Yeah. Don't have inspections.
Yeah, no inspections. Exactly. So.
And what is the cost for a refinance to a homeowner?
The cost can vary pretty dramatically. The taxes on the property are really what drive your bottom line as far as cost, because when we're refinancing a property, we're recreating your escrow accounts.
Okay.
And that is where you see the biggest bulk of the expense. The actual fee to refinance with Raveis is $13.90. Plus your attorney fee, but that's a flat fee. It's not based on the loan amount, but we have to factor in all of the other ancillary costs like recreating your escrow accounts, recreating your tax accounts, and all of that. And that's what I can customize that for any borrower.
Okay, that's good to know. So you talked about appraisals.
Yeah.
So what's going on there?
This is the first time in a long time that we've seen this. We've gone back to almost a mandated drive-by appraisal, which means they're just doing an exterior inspection of the home. They're not going inside. Obviously, with what's going on right now, COVID-19, people are scared to have strangers coming into their homes. If at all possible, we try to avoid that. So the appraisers are just doing exterior inspections right now, taking pictures of the outside. If we need to get pictures of inside, let's say that you have a kitchen that you really want the appraiser to see, we'll allow the borrower to take pictures and send those pictures to the appraiser as if they were in the house themselves.
Now, is this including FHA will do drive-by?
Yeah. FHA.
Wow, okay.
There's the FHA, CHFA, and conventional loans are all allowing drive-bys for purchase.
Okay.
Refis get a little bit tricky. It depends on who owns the current loan. And again, that's when I have to look at the actual house or the actual mortgage to let you know who owns the loan currently to know if we can do a drive-by appraisal on that.
Okay, I know I've had a couple of drive-by, but I know that if we do have an appraisal, us as agents are not supposed to go in there. The only thing we can do is give them access to the house with their mask and their gloves and everything like that. Okay, so is there any advice from a mortgage perspective that you would give people during these high times? I mean, obviously some people are staying, some people are moving. Any tips of wisdom?
Yeah, for
Chris?
sure. I would say that if you've been qualified or pre-qualified or even pre-approved, completely approved, and it's been more than, 2.5 weeks since you've talked to your lender, reach back out to them to make sure that you're still qualified all the changes. Notify
Changing that much?
Yeah, the changes are pretty dramatic, and they're in their daily. Rates have changed dramatically. There's a lot of lenders who are stepping out. We saw some lenders last week stepping out of lending in New York altogether.
Oh, wow.
Is kind of an empty feeling for us. I don't think we're going to see that here in Connecticut, at least not in central Connecticut. That we don't know. Like I said, we're going day to day. But what I'd say is reach out to your lenders. As an agent, I would make sure that you contact anybody that you're shopping around with. Make sure you reach out to their lender. Make sure they're still qualified. Make sure they're still gainfully employed.
Yeah.
That's a big one right now. We're getting calls from people that are getting laid off or they're going on furlough. And the restrictions now are tight. We've tightened up what we're doing on the back end of the loan. So right before you close, they're going to ask you for your most recent paycheck. They're going to make sure they get verification from your employer that you're still working the same hours.
Yeah.
Unfortunately, a lot of people's hours have been cut, and that may mean that they don't qualify for the mortgage that they once were qualified for. So the best advice I can give is just stay on top of your borrowers, make sure the borrowers staying on top of their lenders, and everybody's on the same page.
Yeah, definitely good advice. Well, thank you very much, Chris. I know we are definitely navigating new landscape here, and we want everybody to be safe and healthy, and we will get through this.
We will.
So thanks, everybody.
Thanks, Deb. Good
All
luck.
right. Bye-bye.
Stay safe.
Thanks.